Yo, back with another video. Hey man, I just want to come on here and just break down real quick the three major indices of the stock market. That was running through my mind, so I was like, man, let me just make a video real quick, help bring some more understanding about as it relates to investing in the stock market and investing into these three different indices. So real quick, we're just going to explain the Dow Jones, the S&P 500, and the NASDAQ. So I'll start with the Dow, or the Dow Jones Industrial Average. The Dow Jones, or Dow for short. Basically what this index tracks is 30 blue chip companies. That's it, only 30. It's been around, if I'm not mistaken, longer than the other two. And what I think the Dow is cool, but I think it worked best in yesteryear's market. Why do I say that? One, because our stock market today is huge. This is the biggest it's ever been. And I just looked it up a few days ago that the total, monetary value, if you will, of the entire stock market is valued at $62 trillion. So the reason why I think the Dow is not as great of a gauge of the total market overall is because it's way too many companies in the stock market now, and then it only tracks 30 blue chip companies. It don't even track the top 30 companies. So when I say blue chip companies, think companies that's been around a long time, top brand name companies, the OG names. They can be they vary from sector to sector, and even if they're in the same sector, from industry to industry. Names such as Home Depot, General Electric, IBM, like I'm talking about the granddaddies of the stock market. So yeah, that's the Dow. To each his own, but me personally, I don't think it's a good way to gauge the market in today's economy, because it's way too big now. When the market was in its infancy and when it was much smaller, yeah, the Dow was great because the stock market was much smaller. So it was a little more accurate than it is today. For instance, the Dow, I think it can be, let's say if the Dow fell a little bit in a certain day, the overall market could still be doing great. For instance, the NASDAQ and the S&P 500 could still be doing great, even if the Dow wasn't. So that's the Dow Jones. So we're gonna move to the S&P 500, which is arguably the most, I'd probably say the most watched index, the most tracked index. It's the most popular, in my opinion. I think it's the most popular index. And what the S&P 500 tracks is the top 500 companies by market cap in the overall stock market. Market cap, pretty to simplify it, because if you look it up, it has these long, complex definitions. It's pretty much what the market values this company at. So some of the big names in the S&P 500: Amazon, Apple, Google, of course NVIDIA, which is like everybody's favorite stock, Tesla, Max, everything in the Magnificent Seven, and then some. You got T-Mobile in there, probably AT&T might be in there, McDonald's might be in there, and in comparison to the Dow, the S&P 500 is a much better index by which to gauge the entire market, because those 500 companies covers roughly 80% of the entire stock market. So it's a great way to gauge the health of the market overall in any given day, any time of the year. no matter what the economy is. If you want to know how the economy is doing and you want a more accurate way to find out, just take a look at the S&P 500. If the S&P 500 is doing good, then you can safely conclude that the market as a whole is doing good, and vice versa is true. If the S&P 500 is slipping, if it's declining, then you can safely assume that the market overall is declining. We're gonna move on to the NASDAQ, which is I wouldn't say I have a favorite index, but I tend to research this index I tend to look at this index more than the other ones. Because I don't invest in the S&P 500, but I do invest in the NASDAQ. And the NASDAQ is a little unique. And I'm going to explain why. So the NASDAQ is the more recent index. It came out, technically it's not an index. It's an actual stock market. The NASDAQ is a stock exchange. And in the US, you got the two major exchanges. You got the NYSE, or the New York Stock Exchange, and then you also have the NASDAQ, which isn't it's also an acronym, but it's a long acronym. The only thing I remember is the N part, national. That's it. But anyway, it is a stock exchange. It is its own stock market. It's more than an index. And the index that tracks the NASDAQ stock exchange is the NASDAQ composite. So let's say if you're on Google Finance, or if you were just playing around in your brokerage app, I don't know which apps y'all use. I use Fidelity. But let's say if you was looking up funds that track the NASDAQ, you might eventually run into a fund with the name NASDAQ composite in the title. And the difference between the NASDAQ composite and just the general NASDAQ is that the NASDAQ composite is the index that tracks the NASDAQ stock market. That's all it is. Prior to me learning this stuff, to me going out researching on my own, I was listening to YouTubers try to explain it, and man, they was confusing the heck out of me. That's why I'm like, I don't think these guys really know what the NASDAQ is. But so I was like, I took it upon myself to go research it, and that is a crucial component to becoming financially literate and becoming a better investor. It's just your own education, your financial education, acquiring as much knowledge as you possibly can. For one of the greatest investors to ever do it, Warren Buffett, he was quoted as saying he reads 500 pages a day as it relates to investing and financial literacy. So if the GOAT, or one of the GOATs, is credited with saying that he invests that much time into his financial education, then I think it would be wise for us to follow suit. That's with anything in life. If you want to get better at it, you just got to learn everything you can. The day you stop learning is the day you stop growing. But back to the NASDAQ. So yeah, that's the NASDAQ composite. And you can actually invest in the NASDAQ index. A couple funds that I know off the top of my head, and it's only two funds that I know of right now that tracks the NASDAQ stock market as a whole. So Fidelity has an index fund, ticker symbol FNCMX. It's a good fund. It came out, I want to say 2003. It tracks the NASDAQ, and the ETF version of that, ticker symbol 1Q, ONEQ, and it also came out in 2003. And if you one of those people who takes into account the share price of a fund before you invest, the ETF version is much cheaper than the index version. So yeah, I put that out there. And then so with the NASDAQ, you got several spinoffs. You got the NASDAQ composite, you got the NASDAQ 100, which is probably the most talked about form of the NASDAQ. And the NASDAQ 100 is another index. It's a much smaller index that tracks only 100 non-financial companies in the NASDAQ stock market. The top 100 non-financial companies: Costco, Amazon, Netflix, these types of companies. And one of the the most popular fund by far that tracks the NASDAQ 100 is Invesco's ETF QQQ, ticker symbol QQQ. That's one of the big dogs. It's the only fund that I know of that tracks the NASDAQ 100. You don't have a lot of ETFs that tracks the NASDAQ 100. I'm not sure why, but the share price of that ETF is almost $600. I was like, oof. For somebody who likes buying whole shares, I kind of stayed away from that fund. But it's a great fund. It beats the S&P 500 significantly. As it relates to return on investment year by year, if you track the last 5 years, if you look at the last 5 years of the S&P 500 and compare it to the NASDAQ 100 or even the NASDAQ as a whole, they both blew the S&P 500 out the water. And so, because you often hear this thing where it's hard to beat the market. No, it's not. It's a lot of passively managed funds that beat the market. Growth funds. Every growth fund that I know of beats the S&P 500 by a long shot. Any fund that tracks the NASDAQ is going to beat the S&P 500 by a long shot. I don't know why a lot of people don't say that, but I'm like, once you do your own, one thing I noticed in this investing world, this financial world, it's a lot of gatekeeping. So if you want to learn the truth, you got to be self-motivated, take the initiative and find it out for yourself. Because they not the best investments, and that's not just in the financial world, that's any aspect of life. All the best, the most beneficial things never get advertised. You don't see restaurants or you don't see commercials advertising water or advertising fruit, but you will see commercials advertising junk food and sugar-laden beverages, sodas and juice and whatnot. So it's the same thing in the investing world. You don't see them advertising passively managed funds that beat the S&P 500. You pretty much have to assume that to beat the S&P 500 or the stock market, you got to pick your own stocks or find a mutual fund, which that's not true. Sound like coyotes in the back. Yeah, I'm outside. I'm at work. I'll be recording these videos at work, so I gotta keep my ear out, man. Hey, you got owls, coyotes, all types of stuff out here. But anyway, those are the three major. I'm not sure if I'm saying this right. Indices. Y'all know what I'm getting at. But those are the three major indices that pretty much gauges the market. I remember growing up. I'm 32 now. I remember growing up in South Florida, and I would watch Channel 7. Well, my grandma would watch Channel 7. I would just be in there. So by default, I'm watching Channel 7 News, WSVN. And after every segment, they would post these indexes. But I didn't have no clue what these things were. But I was always curious. I'm like, what is the S&P 500, the Dow, and the NASDAQ? Why they keep showing this? Like, what? And then they would have these numbers underneath. I'm like, what do these numbers mean? What do these abbreviations mean? And it wasn't until nearly 30 years later that I'm finding out, oh, this stuff is in relation to the stock market. But because I didn't grow up in a financially literate household or financially literate environment, we were just oblivious. My parents, all my relatives were oblivious to investing. We just knew how to spend money. And so while I was curious about those numbers and the acronyms, the abbreviations, there was nobody to explain it. So here I am, man. Every time I get a piece of knowledge and master this knowledge, I'm talking about take it from here to here. I'm going to jump on here and share it with y'all. I ain't no gatekeeper, man. I want everybody to win. I want everybody to win. You know what I mean? So, hey, I wish y'all the best, man. Those are the top three indices. While it's fresh on my mind. So if you want to invest in any of these three indexes, you got a lot of ETFs that tracks the S&P 500, such as Vanguard's VOO. They're probably the most popular ETF out there. You got another ETF from State Street, SPY, ticker symbol SPY. Fidelity has an index fund, ticker symbol FXAIX, that tracks the S&P 500. You have another fund, I believe is from State Street, if I'm not mistaken, SPLG. You got an ETF from iShares, ticker symbol IVV. And if you want to invest in the NASDAQ composite, remember, the NASDAQ composite and the NASDAQ 100 are entirely different. The NASDAQ 100 takes the top 100 non-financial companies of the NASDAQ composite. So what the NASDAQ 100 is just really a spinoff, a smaller index, a more concentrated form of the NASDAQ composite. But funds that track the NASDAQ composite, remember, Fidelity's ETF, 1Q, ONEQ, that's the ETF. Then the index fund, FNCMX, they both yield the same return on investments. They're the same funds. As one is an ETF version, the other is an index version. Then you got funds that track the NASDAQ 100, Invesco's QQQ, but they also rolled out another ETF in 2020. Man, I'll be researching this stuff a lot, man. You got QQQM. So they say it's the ESG version of the QQQ ETF, but I looked at the holdings and they're all the same. So I'm like, I don't know what the difference is, but if you like to buy whole shares, you come out better getting QQQM because it's much cheaper as it relates to the share price. And there's only one ETF that tracks the Dow Jones, and that is State Street's ETF, ticker symbol DIA. That's it. Like I said, the Dow is not as great. That index is not the best index to track or to gauge the entire market as a whole. So that's what it is, y'all. You know what I'm saying? Hey, tell me if anybody who watches this video, leave a comment and let me know what I need to work on. Presentation, if I'm loud enough, if I'm concise enough or not. Hey, I'm open to feedback. Constructive criticism is always welcome. But I appreciate y'all for supporting, watching. Y'all be blessed. Peace.